the 199th BlockTalks, we speak with Paul Howard, Senior Director at Wincent, who explains the role of market makers in crypto. I'm your host, Mauricio Magaldi, and this is Blockdrops, your weekly digest on blockchain for business. These news are not a form of endorsement, sponsorship, or encouragement for consumption, and are meant for educational purposes only. All right, everybody, I'm here with Paul Howard, who's going to tell us who he is and what he does with blockchain. Paul, welcome to BlockTalks.
Thanks so much for having me. Real pleasure to be here, and looking forward to having a great conversation. I got into the space, I guess, just through technology. Working in the financial services industry, I saw how computer science and computing could really transform that business. And that inspired me to do a computer science degree. And in 2012, I got introduced to Bitcoin. And that was really the start of the journey for myself. And has culminated in me working at Wincent, which is a market maker. And, we have, I think market makers get a bit of a bad rap sometimes, but I'm looking forward to telling you the reasons why that's undeserved in at least our case.
What was the thing that really triggered your interest on Bitcoin initially and then crypto in general down the line? I mean, I also come from a financial services background, and to me, the whole triple entry thing from the Bitcoin white paper was the turning point of understanding, we won't ever need to reconcile anything ever again. and because I worked in data, that to me was very valuable. And I really didn't realize Bitcoin as a store of value at that point. And then I learned about programmable money, and that kind of blew my mind. But I'm curious to understand what was, the thing or the things that when you realized in the context of technology, they would enable things in financial service or even beyond. What were the things that really triggered your interest for crypto?
I can see one of the challenges at the sort of time, I guess, was just how centralized money distribution and money control was. And the decentralization thematic that kind of made Bitcoin different from, a fiat trading electronically was the driver for me. I think being able to have decentralized control over a store of value I'm just trying to think when that has last happened in, the course of human history. And I think that that's truly exciting. And that was what really got me in.
Yeah, but decentralization is such a hard topic because it's not something tangible. Movement of money is probably more tangible than decentralization, and I'm really glad that this was the thing that really caught your eye, because coming from a financial services background, you were bound by central banks and things like that. So I'm pretty sure that was some form of paradigm shift at that point. But you made an interesting remark on your opening answer, which was the bad rap for a market maker. And do you want to expand on that? Because I also think that there's a reason for them to exist and a value that they bring across markets. So do you want to elaborate on that?
There is, and I think if you're not cognizant of what makes financial markets and liquidity tick, then it's easy to point the finger at, centralized exchanges or market makers, particularly in the new asset class like cryptocurrency, where I think increasingly we're seeing people, let's say, maybe upset with the way that some of the participants are taking these long dated options on coins and projects, only to divest them and have an impact on the the underlying price of the token. And I think that that's created a bit of a perception that market makers are there ripping off retail. Now, my take on that is is twofold. I think, firstly, in defense of the folks or companies that do that business, I think that it's a necessary part of the infrastructure to have liquidity providers. Whether they're, if you've read Flash Boys, these guys taking a small spread or otherwise to provide liquidity for people who are, um, having a much longer time horizon for their investment is, a necessary part of liquidity provision, part of getting a position on your own book. But I think, secondly, for us at least, it's also relevant because we've never gone into, as a company, we've never done any market making on projects other than stable coins. And I think that's one of the things that differentiates Wincent from some of the other makers out there.
Yeah, that's an interesting view, and especially when we're talking about, like, I don't know, 20,000 different currencies in this particular space, maybe more. I'm not counting meme coins, of course, but um, liquidity is what makes markets move around for sure. So, in terms of the current state of affairs of the industry, we've seen a lot of tectonic movement in changes of appetite to support crypto in general. That is an obvious movement in the United States, but other countries are not just sitting and waiting. They're actually discussing what's the path forward, maybe a different path forward than the one that the United States is taking, either with more regulation, sometimes with less regulation, hopefully with better regulation. Um, in your experience, what has been the progression in the recent months, and what are the things that you are looking forward the most as these jurisdictions accommodate for potentially enabling the crypto economy for real?
Yeah, I think a couple of parts to that question. I think, first of all, when we look at the regulatory framework around the world, the US has traditionally been a leader in that space, and other countries have kind of gone off of, a bit of a lean on what the US is doing, whether they go more aggressive or more passive. The US does seem to have a big influence on global policy. And what we saw the last 4 or 5 years was really the US pull back. With um, I describe as a much more sort of hostile regime in the SEC until November. They were very, I, I think, sort of withdrawn from being a leader in that space. Obviously, now with the changes that have happened since Donald Trump came in, we're just seeing a much more open, collaborative environment, and that was quite obvious with the SEC's comments just yesterday, 9th of June, which was embracing DeFi. And I get a sense that we're now in this sweet spot where we'll be probably for the next 2 to 3 years, where globally regulation should be a lot more embracing of what we're doing in this space. And I think that just lends well to companies that are setting up, for example, payment services or liquidity provision, trade financing, even central bank digital currencies. The latter of which doesn't excite me at all, but um, yeah, it's created a culture where we're going to see an acceleration of the industry the next 3 or 4 years, which I'm very excited about.
Are there any particular use cases that you've seen, whether pure crypto or DeFi, that you feel are promising, but for now they're like hidden treasures? I mean, we're now in the stablecoin summer, let's say, right? What else is there for crypto?
I like that. Yeah, I was quoted as putting on record that it was buy in May and go away season rather than sell in May and go away. Um, it's difficult to get excited about stable coins, but I think, as you mentioned, that's probably the sweet spot for the industry. If we're $3.5 trillion at the moment, I could see the next 1.5 trillion coming from stable coins. And when you're in an interest rate environment where we are, sort of above 4 or 5% in most Western countries, that still is an interesting space to be in. The other sort of areas I think are not getting as much coverage as they should. Probably something like Ethereum, perhaps Sui, Aptos, some of these new decentralized finance protocols that have not so far got the traction to kind of get on a par with Ethereum. I think that those are going to be interesting areas. And again, just plays into the hands of what was said by the SEC the other day.
Yeah. No, I hear you. The reason why I say stablecoin summer is that it seems that every cycle we have a summer of sorts, and given the recent, Circle IPO and the acquisition of Bridge by Stripe and all these big numbers kind of, flying around the industry, it seems that they're all related to stablecoins and payments of some sort. There are detractors of this to a certain extent, but I think it's pretty much accepted now that stablecoins are kind of the killer app for crypto, at least for now. And I won't judge this because coming from the global south myself, I've seen stablecoins in action in non-dollarized countries, and what the type of um, the conservation of purchasing power that they yield for those populations. So I think it's important. It has to be taken seriously, and maybe that's the wedge we needed for the crypto economy to really break into the mainstream. This is obviously I'm guessing here. In the work you do, what are the current challenges with this ever-changing regulatory landscape? Is this something that is being either hindering or expanding conversations? Is this something that you lose sleep over? What's the day in life for you these days?
When we consider how regulations have, had an impact on us, we've always done things with a regulatory framework. We're a regulated hedge fund in Gibraltar, 700 plus million AUM under management. And that brings with it a certain amount of responsibility, visibility to shareholders, the investors, etc., more so than a proprietary trading fund would. And so wherever we've looked to expand, and at the moment, for example, the US is very interesting for us. So, we're operating under a broker chaperone license there and looking to get licensed in the States. It's I wouldn't say it's so much sort of been a challenge because a lot of places haven't had the right regulations for a long time. And I think now we're getting some clarity, and that's very helpful for the whole business. The second part of your question, sort of how does my day look like? Big focus for us at the moment is how we can increase the network effect. So, who is it that we're partnering with? Who are those premium companies that are really, transacting hundreds of millions of dollars a day? Because those are the folks that we get most sort of bang for the buck for. Interacting with some of the larger counterparties on the street, providing between sort of 1 to 2 to 3% of liquidity in the market on any given day. We've been very selective about who we work with, and I think when I look at things that keep me up in the day, it's making sure that we have got the right risk management framework in place. We're making the right decisions with companies and coins and partners that we go into bed with. So I think the regulations have just made it a lot more clear about where we can go and what we can do. And, we'll see that. I think the flip side of it is that you're going to get TradFi players coming into the space. We're already seeing the likes of Citadel and others coming in. And I think that presents a big challenge for the crypto natives. And if, we want to, maintain the ethos of the industry and really begin a new industry rather than have one that's sort of sucked up by all the incumbents, then it's going to be important for companies like Wincent and others to really, hone our skills at doing what we know best and staying ahead of those partners, or potentially working with them to be their crypto arm, as it were.
I like that view. I do have to kind of do a callback to your opening response on the decentralization, because if you think about it, the original ethos, especially on the Bitcoin side, was you know, the maxis are like self sovereign, self custody, not your keys, not your coins. And in the last 15, 16 years, we saw an emergence of a variety of intermediaries. Like if you think about custodians or providers of infrastructure for custody, what ultimately they're operating as an intermediary between that original cypherpunk ethos. And to not to a fault of their own, it's an opportunity for them to be that kind of point of entry. In your experience, how has it been over these years to evolve from that initial interest on decentralization, seeing what's happening in the industry now? And maybe a follow-on question to that is, do you see the industry decentralizing even further, or we're going to see just a repetition of the current state of affairs on decentralized rails?
Yeah, there's a part of me that is a bit of a rebel, um, if I can confess to that. I do like to see an interruption of the status quo, the sort of incumbents, um, be upset, as it were. And I think, unfortunately, the industry doesn't really expand or do what I think it can, unless we have these big centralized counterparties coming into it. I mean, there'll always be that 1-2% of holders of Bitcoin or crypto who are fully decentralized. They have their own wallet. They have it off chain. But I think the big uptick in not just where we go over the next 2 to 3 years, but also in probably the majority now of crypto holdings are with centralized authorities, whether that's Strategy or BlackRock or Gemini or Circle. These are companies that will help drive, I guess, innovation, but more importantly, adoption in the space. And for me, there's still the fundamentals that if you wanted to go and have your own wallet, your own keys, your own Bitcoin, you can do that. It's not become, I guess, if you were to look at it like the car industry, these days modern cars are very electronic. You wouldn't go into a gearbox or try and reset the computer on a car yourself. You take it to a garage. Now there's a sort of bit of heritage in the mechanic in me, which remembers going back and taking a piston head off of an engine. And I think cryptocurrency still gives you that option to take the piston head off the engine, but you're never going to get to a 160 mile an hour on a freeway without some electronic aids these days. So yeah, I just think it's a natural maturity of the industry. I imagine.
It maybe a transitional state, even right from a paradigm where everything was centralized, and in a paradigm where like maybe we're halfway there, and at some point crypto natives will mean like self-sovereign individuals, both in ownership terms and also maybe even identity in that capacity. um, One of the aspects that I wanted to explore with you once I read your bio was the transition from being a computer science person coming into financial services and then moving over to the business and becoming like an investment officer. What was the framework for that move? What was the process? Was that opportunistic? Was this planned for? How did you prepare? Can you walk us through a little bit more on that side of your career progression?
Yeah, my I guess my desire has always been to improve the efficiencies of the financial markets, or um, the way that we're doing business. If you look at how we were using paper checks, even as little as 10 years ago to settle transactions. That infuriated the hell out of me. The cost of these things was ridiculous. There was always a part of me that wanted things to be a lot more efficient. And I think as the state of the industry and my skill set improved as well, it wasn't just as good for me to write computer code, far better for me to look at the analysis and the bigger picture of how that technology, how that code could be leveraged. And then it was a natural progressive step to think about, okay, strategically, how can we then um, use, whether it's code or what it is, to make things more efficient. So, back when Wincent started, we had a couple of desktop computers, and the brothers would manually trade and move positions around the exchanges themselves. Fast forward, 3 or 4 years, that then became electronic. And again, the journey has always been about making things more efficient, and that efficiency is now not managed in sort of seconds by you turning around on your computer to another computer, but it's managed in the microseconds for latency to exchanges now. So I think that's always been the underlying theme, and just with the inevitability of technology and progress, we now look at things from a different perspective. Um, and I think having some experience in the industry, understanding how all of the components fit together, acknowledging strengths of other people is really important. I would be the worst computer programmer in a room of 100 programmers right now. But again, not that I'd be the best, but I'd be probably at least one of those that could stand up and articulate perhaps what was going on better than some of them would. And I think just finding the right people to fit in with and the team is how you find how effective you can be, whether you're programming computers, whether you're speaking in front of an audience.
Yeah, I think the suitability applies in a variety of ways in life. Um, in this crazy industry, 24/7 FOMO driven, um, how do you keep up with your health, both physical, mental? Do you have any routine, anything you've been exploring to get better at that?
Crumbs, wow, it's a great question. I've been battling with that for the last 2 or 3 years. One thing that's obviously been a luxury is how we can decentralize ourselves, even when we're talking here, instead of me coming physically to a studio now. I think gives us much more opportunity to, study, reflect, um, keep ourselves in good mental health. I've got a young family. Um, I don't want to miss a day with them, and yet doing something that I love, something that I enjoy, is really important to keeping me happy, and then um, making sure that I can provide for the family as well. So I train. I go out running in the forest with my dog most mornings, take the kids to school, come back, start my day, and usually finish my day with picking the kids up from school, going to the gym, and then normally I'll do 3 or 4 hours work in the evenings as well. So, having that remote, capacity to do a job is great. Um, I've been fortunate enough to spend a month or two abroad in Bali, doing that digital nomad thing for a while. Um, yeah, I, I just try and take things a lot more slowly than I did before. I think when I was 23, 24, everything had to be done tomorrow. Nowadays, I can stagger my time and just be in control of what I'm doing. And I think that just helps you make the right sort of longer term decisions. So, yeah, that's how I manage that stuff.
I like that. Yeah, family time is super important for sure. Um, in that same kind of capacity, um, what what is the one thing that as an industry we have to organize ourselves to fix now to avoid working another 15, 20 years and then realizing we're in the very same place because we didn't fix that one thing. What's that one thing and why?
It's a tough one to fix, but I'm going to say it anyway. And I think it's to do with the amount of, let's say, scams. Let's just call it that. That I see out there, and that's everybody from the actual people who are trying to rip off other people in meetings, setting up fake companies, to the people who are behind you know a wall and setting up whatever it might be, meme coins and rug pulling meme coins. I really think that that's something that the industry has got to improve, just to improve its public image. So that would be, I think, an area that we should focus on. I don't know how that problem gets solved. I guess thinking off the top of my head, it's about validating people with other people in your network. Who can you really trust? And references are a great way for doing that.
Well, there's also an aspect on the permissionlessness of the new paradigm, right? Because it is decentralized, it is permissionless. Anyone, good or bad, can join. And it kind of brings out the best and the worst at the same time. Because regardless of technology, I think we're continuing to be human, I guess. That's kind of where we draw the line. We will greed as part of, you know, humanity in general. So permissionlessness just kind of adds a layer to that, right?
Yeah, it is, and I think more sort of broadly, sort of just in terms of sort of direction, it makes me think about how does the industry actually grow, and when we look at growth of the industry, I think we an easy sort of measure of it is the market capitalization or the total value locked of the entire ecosystem. And the only way that that grows is by new money coming into the system. So, what is it that's driving that new money to come in? Whether it's from retail, from institutions, or BlackRock ETFs, or wherever it is. That is driven by several factors. A lack of trust of centralized counterparties. Transparency, immutability on the blockchain, and these sort of tenants are all things that I think people investing money into the space and putting money into space believe in. They believe in the fact that fiat will be worth less in 12 months than it is right now, and that cryptocurrencies can earn 5x overnight or whatever it may be. And I think that that's a thematic that, as long as we focus on those sort of points and on those topics, and we're going to have a healthy industry for the next 10 years.
I love the take. Um, you have a background in the non-crypto industry, and I'm pretty sure your previous legacy life has people still who have yet to come around and join the crypto industry to any extent. Even though banks are now becoming friendlier to crypto, not everybody is. When they reach out to you and ask for, you know, a welcome kit to crypto, what is your usual recommendation? How do you onboard new people?
For me, what's been interesting is just that it's an industry that I'm always learning. I can dip my finger into understanding a new protocol, a new technology, whatever that might be, but also educating and teaching people about how cryptography and how Bitcoin works, and how the money can be transferred, and why something has value. Why does cryptocurrency have value? And that comes down to something I mentioned earlier. About people believing in the tenets that it stands for. Um, I think it's probably an easy thing to do to start with, would just be to look at Bitcoin and understand what Bitcoin actually does. What is digital ledger technology? Looking at the inflationary versus deflationary nature of fiat versus cryptocurrency, and I think if you can simplify that for folks, the rest of it sort of can really open their mind to what comes possible when you get Ethereum and smart contracts introduced.
Yeah, the programmable money for people in financial services is like, you have to know this, my friend. Like, it's uh, right now is no longer optional. Like, even if you're not trading crypto as like quote unquote investor, if you're in financial services and you refuse to understand what programmable money can mean to your industry, I have I have news for you.
Yeah. Well, I think the advent of AI and bots is going to be such a good use case for cryptocurrency, because you'll end up with automated bots talking to each other. And for example, a bot may, let's say you've got an AI agent that runs your, I don't know, your groceries in the future, or some part of your household is run by an AI bot. It's spent ages learning your spending habits and dynamically adjusts itself. It will need access to a bank account at some point. And that is made a hell of a lot easier when you've got cryptocurrency, because it can sign, it can um, view the transaction record, it can share the transaction record. Your public and private keys mean that that thing can be accessed, or otherwise, an API calls made into it, or otherwise. So I really think that that's um, a cool thing, and a cool way that it can integrate with ourselves.
Yeah, I think there's a potential pattern, like use pattern for crypto in the context of AI agents that can still remain self-sovereign and decentralized, but much better UX. And I think you just nailed it. It's exactly that. It's behavioral, um, programmable behavior. I guess it's what it would look like. Um, how do people find more about you and Wincent and get in touch with you to learn more?
Yeah, well, we're a regulated hedge fund. I think that makes us a little bit different to some of our peers. If you look at the top five, six market makers, you know, Wincent has had a very slow ascension. 3 years ago, we didn't even have a website. So how could people find out about us? It was very much word of mouth. We're now doing a lot more consumer industry facing events. We have a website, Wincent.co, and we're participating at a lot of the big crypto conferences. We have sort of four main business areas that we focus on. One of them is market making. That business line is the bread and butter of the company. We don't do market making on projects or token projects, but we look to market make and the top sort of 1 to 200 coins only. Off of the back of that, we've got a large balance sheet, so that helps us with, for example, OTC trading. So if you're a company that's looking to buy, sell stable coins, crypto, you're a family office, you're an ETF provider, and you want to interface with a regulated, well-funded liquidity provider, then come to Wincent. There's probably the client-facing team are the most active on LinkedIn, and we're at a lot of events now these days. If it's not with our market making or OTC business, then maybe it's you've got interest in DeFi. Maybe you have interest in lock token deals, right? If you're a foundation looking for capital up front, we can put some capital into that business and agree to lock up some tokens for a period of 6 to 12, 18 months. So there's several ways that we can help businesses who are looking to transact in crypto. And our balance sheet is strong. The underlying technology that we've invested in as well, I think, gives us an edge. And so if folks are able to meet us at an event, we'll definitely have a good chat. And also, if people want to reach out, we've got Twitter, LinkedIn accounts now. So we've gone kind of full 360 on what we were doing 3 years prior.
It's the winds of change, absolutely. Awesome, man. So thank you so much for joining us. It was a pleasure learning more about your story, your background, and what brought you here and what keeps you here. And yeah, hopefully we'll bump into each other in a random crypto event at some point. Thank you.
Looking forward to that. Yeah, absolutely.
catch us online. We're on Instagram at BlockDropsPodcast, on Twitter at BlockDropsPod or 0x Mauricio. We're on Lens at blockdrops.lens. We have a newsletter on LinkedIn. Write to us at blockdropspodcast@gmail.com, and you can listen to the Block Drops podcast at Spotify, iColab, Faberbun Tech, and all of the other major streaming platforms. Yay! Shout out to Paul for such an interesting story in blending TradFi with DeFi. Also, shout out to Sunil Chauhan for making this conversation possible. Don't forget to leave the ratings on your favorite player and check out the merch store at blockdropspodcast.xyz. This is all for today. Stay rare, stay weird, LFG.